Well, it's a very good morning from him, and it's a very good morning from me. I hope everybody's well. Let's pop in and say hello, shall we? And come on into our mortgage live stream. Of course, mortgages evolving, aren't they? Protection advice evolving. Maybe next year I might be saying our financial advisor live stream, because there's an awful lot of mortgage advisors, brokers segueing over to MOTs or product transfers and looking at protection needs of clients, starting to look at financial advice, financial advising. There's quite a lot of people wanting to head into that realm. So we might just see that happening in the next year. I do foresee it, by the way, writing a couple of articles this week about this perfect storm that's going on at the moment with our trade and how it's all changing and how we're evolving. So yeah, let's talk about that another time, shall we? Anyway, enough of that. Hope all is good with you. I hope you had a brilliant weekend, because the weather was spectacular, wasn't it? It still is out there, actually, if you're lucky enough to be outside or on a patio or something doing your work. But really, really good weekend weather. And well, we're into June, aren't we, next week? So half term here. Bank holiday, last one, I think, for a while. So let's look forward to that, shall we? What have we got planned for you today? Well, I want to take a look at national insurance for you. I'll give you a big old update on that. There's been a few little tweaks and changes, and we really ought to know about these things. Not because we get involved in national insurance, but it affects a lot of the advice we give. So we do need to know about how it all works, really, particularly if you're in the protection field, which, of course, if you're not, you're probably not making a good living this year. So let's talk about that another time. Anyway, lots of things going on at the weekend, lots of reading and stuff. Something tickled me. I just wanted to share it with you. And it's I'll show you the slide of this one, because it's just quite funny, really. This is from the Money Week or the Week magazine I was reading. This is the bottom paragraph I want to refer you to down here. Does anybody read the privacy policies that organisations are obliged to publish? Think tank here, Tax Policy Associates, suspected not. So he inserted into his website a clause reading, "We will send a bottle of good wine to the first person to read this." And last week he revealed it had taken 3 months for the bottle of wine to be claimed. And I thought that was brilliant. How many of you read terms and conditions and privacy notices and things on websites? I doubt very many of us do. And of course, how many clients read suitability letters, suitability reports, all this paperwork we send them in triplicate for every product and service we get involved in? I doubt very many, actually, if truth be told. Which is why trust and ethics and the right advice and consumer duty is so important in our trade, because people do trust you to do a great job. But we know that, don't we? I thought it was just funny. The other one I heard a couple of years ago was what one website put onto its privacy things, some of its terms and conditions. If you click against this, we will retain your soul forever. Apparently, they kept the soul of all their people. Anyway, enough of that. Let's go over and take a look at our main topic today, which is national insurance. Now, national insurance has been around since, well, actually, if you're interested, 1911. But it was only formalised properly in 1948 by the Labour government, when they came in after the Second World War, when they enhanced the NHS and the welfare state. So national insurance has always been around, but there's been a few changes. And just to share these changes with you, the BBC website here for you, National Insurance Calculator, how much will the 2p cut save me, and what is income tax? National insurance has been in the press last autumn and this March, because our Chancellor, current Chancellor of course, has reduced the national insurance rate by 4p, I think it is in total, 2p last autumn and 2p this spring. But apart from having a look at your pay packet and seeing what's in there, and if you see a few extra pounds in there, not a lot of people really understand and know how it works. And he's trying to eradicate it completely, fair enough, because as far as he's concerned and others, it's just a tax. That's all it is. It's a taxation. However, it does entitle you to certain benefits. So if you pay national insurance, and it's important to do so, and that's the point I want to make in this section, really. If you pay national insurance, it does entitle you to certain state benefits that you wouldn't have got unless you paid it. So let me share with you those state benefits I have in mind for you. Here we are. This little slide gives you an indication of the benefits. And there's 6 main ones. Basic state pension, of course, the new state pension. The job seekers, for people looking for a job because they're unemployed. The employment and support allowance, which is people who are ill, pretty much really, maternity allowance, and the bereavement support payment. Now, these benefits are actually pretty good. If you don't qualify for these benefits, as you can see, yes, 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 yes to the national insurance, you need to pay national insurance to get them. If you don't qualify for these benefits, then you will get universal credit and some other kind of help from the government. But that's all very heavily means tested. These are automatically given to you by the right of having a national insurance record. So obviously state pensions, the big one. That's one that costs the government the most money. But the bereavement support allowance down there, bereavement support payment is an incredibly generous thing, really, at the end of the day. And the employment and support allowance for people who can't work due to illness is massive at the moment. A lot of people are claiming that benefit. And rightly so, because they're ill. So national insurance, therefore, does have a purpose. It's not a tax, really. It is, but it's not a tax. You have to get a record of national insurance. Now, national insurance becomes payable at age 16, which is brilliant, isn't it? I remember paying national insurance when I was a student doing summer work. And it's paid all the way up to 67, which is the current state retirement age, because it's changing at some point, isn't it? So you have to pay national insurance for quite a few working years of your life. Obviously, old age people who have taken their pension 67 plus, don't have to pay national insurance. That may change with the new government, but we'll wait and see. Now, the different rates of national insurance vary according to your employment situation. So what I'm going to do now is head over to the whiteboard and summarise those for you, because these are things you do need to know for the exam as well. So let's just pop across to the whiteboard. This is my little template, my little cheat sheet that I've already pre-prepared, as you can see. Now here I've got employed, self-employed, employer, in other words your boss, and people not working. So there's pretty much 4 categories of people that pay national insurance. Now, if you're employed, as I mentioned to you, between the ages of 16 and 67, you have to pay national insurance. And you pay what's called Class 1. Class 1. I won't worry too much about the class numbers. It might crop up in an exam if you're doing the exam. But Class 1 is just the category that employees pay. And broadly at the moment, you pay 8% or 2%. 8% on the first chunk of your salary and then 2% on the remainder. So it's not like income tax, which gets more and more expensive. This one gets cheaper the more that you earn. And the key figure here for you is the personal allowance figure that's been frozen like forever, a bit like Arctic rolls, aren't they? They've never been defrosted. Or Michael Bublé, they defrost him, don't they, every Christmas? But the point is that the personal allowance has been frozen for a long time now. And it's the same figure. So you pay 8% up to 12 and then 2% above it, which is a lot of money. At the end of the day, it has to be paid. 8%, which is lower, of course, than any other kind of taxes and things like that. So, fair play to it all. You have to pay that. It's above the 12,570, 8%, 2% above another figure as well, above a certain higher figure. Don't worry too much about that, because you can look that up in the tax sheets and the various information that you've got given to you. You pay under PAYE, of course, pay as you earn. So it's paid alongside your income tax as well. So that's employed people, pretty straightforward, really. Now, for your employer, they have to pay on your behalf, and they pay a class, let's get this right out, class 1A and 1B. It's just the category of national insurance that they pay, and they pay at different figures and different rates, but they pay quite a bit of national insurance actually on your behalf. Now, of course, each year you pay your national insurance, you get a credit for that year, and that, of course, helps towards the state benefits that you're going to be getting. Now, self-employed, they work in a different way. There's broadly 3 now. It's a bit complicated now to change the rules a bit, really. Now, up to a certain figure, they pay naught. So let's just put that for you. Up to net profits of 6,7. Let's just put it in there for you. 6,725. So the net profits, they pay at 0%. So they don't pay national insurance if their net profits are very low, but they can voluntarily pay class 3. And I come on to that in a second. They can volunteer to pay class 3. Now, why would they do that? Well, if they don't pay national insurance, they don't get a credit for that year for national insurance. So they don't benefit from the state pension, that sort of thing. The state pension, you need 35 years of service or paying national insurance to get your full state pension. So it's worth doing. But these people, of course, are not earning a huge amount of money, aren't they? Now, between that and that personal allowance figure, 12,570, there you go. Let's put the figure in there. They pay, but they don't. They actually pay 0%. The government pays the 2% for them. There you go. Pays the 2% for them. Now, 2% used to be, or I should say, class 2. Let's just put that down there. It was a fixed figure, isn't it? The government paid class 2 on your behalf, and that just keeps your record for national insurance. Now, they abolished it effectively. What used to happen is that the self-employed would pay £2 or £3 a week as class 2 national insurance. And that was going on for years. And then they abolished it, and then they brought it back again, and then they abolished it again. It's been in and out like a yo-yo. But it's finally gone now. But the government kind of give you a credit for class 2, just to keep your record up to speed. Now, beyond 570 in profits, that's when you start paying class 4. Yeah, so we've got all the classes up now, haven't we? And the figures there, not important, the figures, because you can see those. So currently 6% and 2%, slightly less than employed people, but let's not worry too much about that. So, that's how the self-employed do it. Again, you won't need to worry about calculating this sort of thing. You just need to know that the self-employed person's paid their stamp, if you like. They've got their credit for the year. So people not working then, let's have a quick look at what happens here. This is quite important, actually. You can, as I said to you, pay class 3. So if you're not working for any reason, you can pay class 3 national insurance to catch up for those lost years. Because state pension, for example, you need 35 years, don't you? So there is a voluntary class that you can start paying when you start working again. You can start paying class 3 voluntary contributions to pick up your record. And that's worth thinking about, because things like the state pension, of course, are guaranteed, and you've got triple locks and all sorts of things, isn't it? Now, the other thing to think about down here is you can get credits for national insurance for various state benefits that you're receiving. And there's 2 important ones here. This is for you to think about. And what I'm saying here is, if you're not working and you're claiming some state benefits, the state will give you a credit for national insurance for that year, which is like worth a lot of money, a bit like paying the state paying your class 3 for you. And there's 2 important ones here that affect us as financial advisors. The first one is the carer's allowance. Now, the carer's allowance is given to somebody who's caring for somebody that needs caring, and it's for people of working age. And the whole point about carer's allowance, it gives you a few pounds each week, of course it does, but it also gives you a credit for national insurance. So if you've got somebody in their 30s looking after an elderly mother, for example, the person in their 30s, she will get a credit for national insurance, and she'll get a few pounds as well. The other one is child benefit. Now, this one's been in the news a lot, isn't it, really? Child benefit, because they're trying to tweak the means testing on that one. Now, child benefit, as you know, you have to repay it when your salary, one person's salary, is over a certain figure. And it's fair or unfair. People talk about that a lot, but even if you didn't want it, you should claim it and then opt not to receive it. Sounds a bit daft, doesn't it? So claim child benefit, but say, look, I don't actually want it, because you can have to pay it back anyway, maybe because your partner earns more than a certain amount of money. But by claiming child benefit, the person claiming it gets the credit for national insurance, and that's important to think about. Do you give advice on this stuff? Not really. If you're in the later life lending market, you might get involved in that. If you're talking about protection for a family, you'll probably talk about child benefit a little bit as well. So that's the basics then of national insurance. Don't worry about the numbers and stuff. You need to remember those things. Just the employed people pay class 1. Self-employed only pay class 4 now. If you're not working, you could pay class 3 voluntary contributions as well. Class 2's gone now, but the government pay that at the moment. Well, kind of pay it in a way. They don't pay it, do they? They just give person a credit for their national insurance record. So that's a good update for you on the numbers. Let's just finish off the topic then, shall we? Pop across here. Will it stay or will it go? The Clash, of course, introduced that tune in 1982. Great tune that was. London band The Clash. Will it stay or will it go? Or should I stay or should I go? Those things. But the point is, though, will national insurance stay or will it go? If we have a Conservative government for another term, which I doubt if we will, I think Jeremy Hunt will get rid of it. Will Rachel do the same thing? I don't know. It depends on what her plans are. But who then funds national insurance based welfare benefits. It'll just come under the general tax situation, won't it? Who will fund the NHS? Well, I think the NHS is funded by basic tax anyway. So I think they're just trying to simplify things. And arguably, national insurance is quite complicated, isn't it? Now, what's the action for you as a financial advisor, mortgage advisor, protection advisor? Well, you won't get into topics around national insurance, but there's a couple of things you can do. If you're talking about pensions, giving pensions advice, then you'll need to know what state pension they're going to get. And there's an online form called a BR19, which you can complete online. And what that does is it gives you a forecast of what state pension you're entitled to at certain ages. You should do that for your clients because they then know how much state pension they're going to get. So I think that's definitely something to think about. And if you're an advisor authorised in that area, you'll want to top that up with some kind of SIP or personal pension. So that's the first thing to do. See what state pension they're entitled to. Now, the other thing is, when you're talking about state benefits, on that slide over here, for example, we talked about, as you can see here, employment support allowance, job seekers allowance, maternity bereavement support payment. Now, these are state benefits and they give a certain amount of money. But if somebody is concerned about illness and dying and they have a family to look after, debts to repay, then they'll look for some extra protection, won't they? They'll look for some life assurance or income protection or critical illness from you. So when you talk about protection, there is a state benefit foundation there, and I'd bring the topic up, otherwise the client will only object later anyway. Oh, the state will pay me. There is a basic amount of money they're going to get. So find out how they pay the national insurance, what they're entitled to, and make them aware that they might get £100 a week or something. And then you need to build in on top of that private provision with income protection, insurance, life assurance, that sort of thing. So that's something to think about as well as a financial advisor. Bring the topic up, otherwise it will come back to bite you on the bottom, as these things always do. So that's national insurance. An update for you. Hope you've enjoyed that. Bye. Good. Okay, well done. So, bit of an update there for you on national insurance. Hope that's been useful for you. Again, we're updating all our materials at the moment. Readiness for the new syllabus is coming in August, September. We're doing some new videos. We're having a look at existing ones. Many of them are completely evergreen anyway. Not a lot's changing in this syllabus change, really. I won't worry too much about the changes. So we're amending things, adjusting things, improving things, bringing in some new products for the autumn. Because the market's going to pick up. We're swinging back round. The economy's booming again. Well, not booming, but it's swinging back round. The market's looking good if you've been reading the press. The mini recession we had last autumn's pretty gone now. We've got GDP growing. Inflation's coming right down, which is fantastic. Mainly because of a year ago, gas prices went up and now they've come right down, haven't they? And oil prices, petrol prices are bubbling a little bit, aren't they? Food prices a year ago shot up. Now, of course, they're coming down. So inflation itself, the headline inflation is quite low. Will the Bank of England reduce interest rates? We don't know yet. Next month, June, they might do. Probably by a quarter. If they don't, they'll do it in September because that's something they'll do. And that'll start picking things up. And of course, we've got the election coming along. And then next year, springtime, we could see things really bouncing. So get yourself prepared for that. Get your infrastructure together. Get those exams out the way you need to get to, because it will get busy again. And you won't even notice it. Suddenly, it'll get busy. It always works. Every downturn, we always have an upturn. We've had that for years. So get yourself prepared for that one. And we'll help you as much as possible. As always, if you want to get onto our database there, we've been sending out some special offers this week to people on our database, some offers and things, and some new products and ideas that we got planned for you. So that's all working really well. So that's all for you to enjoy as well. Other than that, I'm going to wish you a fantastic few days in the sunshine, whatever is your cup of tea this week. Maybe you're off next week with the half term. Kids are all off, aren't they, enjoying the sunshine? We'll see you all next week.